what happens with these cryptocurrencies is they're tracked on blockchain. Okay. So blockchain is just that system that tracks them. Now, there's only so much crypto or so much Bitcoin given out or made, if you will. So there's only this many coins that are actually made. Now, what happens is, since there's only this many made and there's no federal government or anyone else to come back in and say, okay, we're going to make this, what happens? The price can't get diluted at all. So it holds its value. This is why you're seeing this go up, because what makes something valuable? It's scarcity.
Hello, profit first entrepreneurs and thought leaders. I am so excited today because we have a very special guest. His name is Emlen Miles-Mattingly. And Emlen is the CEO and founder of Gen Next Wealth. And Emlen has over 20 years of experience in the financial service industry. And today he really spends his time helping clients make smart financial decisions. Prior to starting Gen Next Wealth, Emlen was involved with selling insurance products for large corporations. But then as he was doing it, he started getting questions about, retirement accounts, estate plans, employee benefits, and other financial concepts. And what he realized was, I'm not just selling products, but I need to be able to offer solutions. And so upon realizing this, Emlen created Gen Next Wealth to focus on financial planning and provide comprehensive solutions for his clients. So please join me in welcoming Emlen to the background. And today we've got a really exciting topic. I know you guys have been watching his market, getting butterflies in your stomach. People are saying, should I buy? Should I sell? Should I hold? Is this permanent? What should I do? And so we're going to talk about what do you do in times like this? And we're going to talk about investment strategies. We're going to talk about the elephant in the room, cryptocurrency. You guys have been asking me to sign those sophisticated investor forms that you make more than $250,000. We're going to talk about what are you really getting in today when you sign those forms. So please join me in welcoming Emlen Miles-Mattingly to the platform. Hi, Emlen. How are you doing today?
Thanks for having me on. I'm doing great.
Well, we are excited to have you on because, I listen to your podcast and, you just dropped some really good juicy nuggets in there about investing and, and it's really great to bring you here. And, what do you think about this market? I'm getting a lot of questions, do you buy, sell, hold? Is this a correction? Is this a tank? What is going on?
Yeah, absolutely. I mean, I think it's one of those things. It's definitely, there's some market volatility, right? Let's say that there's a lot of volatility in the market. There's a lot of talk about interest rates. There's a lot of talk about inflation. There's a lot of talk about different things, right? So, but when isn't there talk about stuff that's going on in the market? So I think it's more about behavior than anything else. I think that understanding how to behave in the markets is more important than understanding the market, because no one quite fully understands it. There's some market movers. You can look at different things and say, okay, I like this, I like that, different indicators, whether it's interest rates or different indicators of different commodities that are on the market. But behavior trumps all of that, right? Because you can have all the grandest ideas about what you want to do and what you want to invest in and behave wrong, meaning, pulling out all your money, putting money in, not investing at all. Those are all behavior things, right? Those are the things that impact you. And I think sometimes we have to take a step back and think more so about behavior than we do about the actual market, because the market's going to always be volatile.
I love that, because, as I was watching my investments take 10% over 2 days, I was starting to wonder myself. I was like, man, maybe I should go ahead and sell it. I still have some gain. And so if it goes down way, way low, I can say I can buy more at a discount, but you're right. So tell me about behaviors more. Let's dive into what that really means. And let's talk about that a little bit more with behaviors.
Absolutely. So when there's one of the things that one of the books that I love is called Behavior Gap. This is from Carl Richards, one of my favorite authors. But he talks about just different behaviors that investors have as the market is moving, right? Like you always hear, you said it yourself, about the emotions that are tied to the market. So there's the emotions that are tied to your money already, right? And then there's this unknown about the market. So most people don't understand what we say when we say the market. What market are we talking about? Are we talking S&P? Are we talking NASDAQ 100? Are we talking Dow? What are we talking? So first things first is understanding which market we're talking about. So then after we have that, then understanding that it's going to fluctuate. Okay. And that's okay. Now, if you have a strategy in place, this is when that's really important. And most investors don't have a strategy. This is why they hire someone to come in and put together and put in place an investment strategy, right? So if we're trying to have a growth strategy, if we're trying to have whatever strategy it may be, if we're trying to be tax efficient, what have you, you stick to your strategy over the emotions that come with the movement in the market, if that makes sense. So that's what we focus on. So one of the analogies I give to my clients, right, is this, like what we try to look at in your portfolio. And I'm not going to give like specifics about what we put in the portfolios, but I look at it like this: offense, defense, and special teams. This is the way I tell people. And so when you're putting together your portfolio, your strategy, right, you have a strategy that can have offense, defense, and special teams in it. Now, when the market is going up, this is when the offensive part of your strategy should be doing well, right? The defensive part shouldn't be performing as well during that period of time. Now we have, when the market's going down, like we see right now, or the market's really fluctuating, that defensive side of your strategy should really, really kick in. And that's where you should see, that part of your portfolio being able to sustain through the fluctuation of a negative market. Then if you go on to the special teams, that's that in between stuff. And I like to do it like that. I mean, we got the Super Bowl coming around here pretty soon. And so I know the football analogy really sticks with people. And so what I tell them is you try to, smooth out your investment experience. There's a lot of people that are talking about, trying to get big gains. It's like, okay, yeah, you can get the big gains, but sometimes those big gains also have big losses, right? So you have to be able to understand what your risk tolerance is, right? And then really be true to that. This is where the rebalancing comes in, right? This is where the help of an advisor comes in. And so I think that the whole thing with the behavioral stuff is understanding what you want to accomplish in that space, right? If it's a retirement money, is this pay money? Is it play money? What do I need this money for? And then looking through that lens makes things easier to say, okay, it's okay right now. The market's fluctuating, right? Timelines. I have 10 years before I need this money. What's happening today really isn't going to impact what I need in 10 years. Right. And so being able to talk through those things really, really make an impact in the person's overall investment performance. Because if you think about it, what's your best ally in the market? Time. So that's where we try to spend that time with the clients and make sure that they understand it's okay. We're going to fluctuate unless we have something that's coming up really, really quick where we need this money. I don't really foresee you having to worry the way you are. And we have those conversations with clients and they really tend to enjoy that. I got some more analogies. I'll get into them a little bit later, but I give a few other analogies for my clients to make sure that we can, like I said, smooth out that investment experience.
I love that. That's some really juicy morsels there, Emlen, is, proper first entrepreneur's time, right? How much time do you have before you're going to be retiring, right? Are you retiring next 2 years, next 5 years, next 10 years, because, I personally have never seen the market end up low permanently,
Yeah.
I think that's interesting what you bring out, Emlen, is about, having a strategy that's, defensive and as well as proactive, and really we're talking about hedging here. Mm-hmm. And tell me what a good balanced strategy looks like that would allow one to hedge risk.
Yeah, absolutely. So one of the things I like to do is I like to do direct indexing. Right. We talked about that. Some of the stuff we do with our clients is that's how I do the direct indexing is one way that I hedge risk. But the other way that I like to do it is by having a diverse, portfolio makeup. And I think that is where we spend that time. And that's where you hear me talking about the offense, defense, and special teams. And I can go in and say, okay, look, understand this. If the market is doing, this is one thing that I think people tend to forget. Like if the market is doing 12, right? Unless you want to match the market, your risk you shouldn't be doing stuff to get a 12 unless that's really where you're at. And most people aren't there. So the way that we can do that is saying, okay, this is where we're going to achieve our growth, right? And this is the percentage of that portfolio. You've heard of the 60-40 mix, right? That's a pretty basic mix for people. Let's say, okay, 60% of your portfolio is going to be in equity and 40% is going to be in some bonds or some mix of, something like that. And when you can do that, that is one way that you can hedge your bets, right? That's one way that you can protect yourself. Now, there's no complete protection because we know the market is the market, but we know that we won't be as depending on your appetite for risk, we won't be subject to those large fluctuations based on the appetite we have for risk in the investments that match that.
Love that. So that 60/40 rule and just looking at your diversification and in your portfolio, that's really good. Now, one of the questions that I always get from entrepreneurs is, and I see it especially in my clients because they send me these things, these red herring letters that they want me to sign off that they're qualified investors, sophisticated investors. And they're really wanting to get into I'm gonna call it cryptocurrency, right? They want to get into cryptocurrency, and I like to call it funny money. I
Yeah.
can't buy anything from Walgreens. I don't know if I want it. But let's talk a little bit about cryptocurrency. Let's talk about what it is and let's talk about the risk and the benefits of it.
Absolutely. I think that first of all, I'm all in on crypto. Okay, just so you know, I'm a crypto advocate. I believe in it. But I think talking about it from a standpoint of what it is, right, and giving people, because some people that are investing in it don't quite know what it is, right? So what I'm thinking here, or what I would think here, is on when it comes to crypto, we got to start with blockchain. So blockchain is kind of like the accounting system for all of cryptocurrency. So this is where almost like I would say like a federal system, but there is no federal system. It's just a place where everything is accounted for. Now let's get into the largest cryptocurrency. We'll talk about Bitcoin. That's the one that everybody talks about. People talk about ETH too, but let's talk about why crypto is so big right now. So the whole thing around cryptocurrency is being able to decentralize finance. So you've heard of the DeFi movement. And so what happens with crypto, unlike in the United States, when we run out of money, we just print more, right? We put more cash in the system. It changes what's going on in the economy. It really, everybody has their conversations about that. We shouldn't have more, or if we should have less or whatnot. What happens with these cryptocurrencies is they're tracked on blockchain. Okay. So blockchain is just that system that tracks them. Now, there's only so much crypto or so much Bitcoin given out or made, if you will. So there's only this many coins that are actually made. Now, what happens is, since there's only this many made and there's no federal government or anyone else to come back in and say, okay, we're going to make this, what happens? The price can't get diluted at all. So it holds its value. This is why you're seeing this go up, because what makes something valuable? It's scarcity. If there's only a limited supply of it, this is what makes it valuable. So what you're seeing with crypto is that there's a limited supply of Bitcoin. We're saying crypto, but we're going to say this in particular coin, there's a limited supply of it. So that's why you're seeing the prices fluctuate. And people can say, this is what I'm willing to pay for this, because there's no more of it. And this is what I want one of them for. And then the last time I checked, I think it was like 43,000 or something like that. So that's what you're seeing. So that's what people are buying. And that's why it's so like mystifying, if you will, because there is no government regulation. Right. And so since there's no government regulation, it does have a little bit of risk, right? People get scared of that. They're like, well, there's no government. But then again, it's like, well, people were complaining about the government having all the control. People were complaining about the government being able to influx cash into the economy and change the value of the currency of the current, wherever country you're in. So this removes that ability from the government and it gives it to the consumer. So now you have consumer direct consumer transactions without having dollars. And this is what makes it so scary, because now I can buy stuff directly from you without a bank, right? So I don't have to have a bank. So this is why they're talking about DeFi. And so now this cryptocurrency, or Bitcoin in particular, has a value associated with the scarcity that it presents, because there's not enough of it to go around. And so what happened is they built this one, and then they have, you've heard of Doge, you've heard of Ether. I'm sure you've heard of some of the other, there's tons of coins out there. So what I try to do is I stay in the coins that I personally know. And I feel comfortable with Bitcoin, and I feel comfortable with Ether. There's a couple other new ones that are coming out, but I won't put those on there because I don't want to send people on those chases. But the biggest thing about it is that it is not centralized, and it is a place that, the market does not close on crypto. It's 24/7. And now the thing that people are worried about, and I heard you allude to it, is like, well, I can't buy anything with Bitcoin, but you can't buy anything with your stock. Well, technically you can. You take equity out of it and you can buy that. And you can take equity out of Bitcoin and buy stuff like that. But if you sell it, then you have the cash. right? It's the same type of thing when you have your individual stocks, same type of thought there. So that's kind of like crypto broad stroke overview of what it is. But I mean, please ask me any follow-up questions that if you need any more, if you need me to clarify something.
That was a great explanation, very detailed on there. Emlen, so one of the questions just from talking with you, so it's a limited supply, it's a scarcity of actual physical coins that exist. You can buy a piece of a Bitcoin, right?
Yeah.
With that being said, then who produces these things? How? And I say this from having a background in the financial service industry, working with some of the larger banks. And how do you control? How do you know that what you're buying is real?
Mm-hmm. So because it's the whole scarcity thing, and it's the that's why I started with the blockchain. That's where it's all like taken care of and accounted for there. So it is real there. The values, I mean, I'll put it to you this way. The only thing is that it's not, it's kind of hard. Like I'm trying to get that one in there. So when I think about it in terms of, because it's like, is it safe? Right. It's because it's like just think of it as a new asset class. Right. And so think of it as like what I tell people when I think of it as a speculative asset class. Now, when it comes that way and it's a speculation asset class, this is you're treated as such. I'm not saying that you should put 200, every dollar of your money in there. Right. But at the same time, would you look at it this way? If you were investing in tech, there's some speculative tech, right? If this company goes public, then it's going to go, we know we're going to have a liquidity event if it goes public. So look at it, Bitcoin. That's how I look at it, as a speculative investment that I don't want to miss out on. So I'm going to dabble in it because I think it's going to be something viable. Is it going anywhere? I don't think it's going anywhere. This was created, Bitcoin. I forget the guy's name. I'm like, you put me on the spot with that one. I was like, what is his name? So he created this thing, and then that's when he created Bitcoin. I want to say it was like 2009, 2011, somewhere in there. Now this is on wax, so everybody can quote me on that. But I don't remember if that's the exact date. But he created this because of the whole thing with the finance, right? And the unbanked. Think about how many people are unbanked. Think about how many people.
That's a scary thought. That's a scary, scary thought.
And the government that we love and trust so much, and I'm not a government bashing, I'm not going to get on that, but I'm just saying, like, the government that we trust so much is in charge of our currency, and we all have our own opinions about what they're doing with the currency. And don't get me started on other things that they've done wrong. So I think like the whole DeFi movement is here to stay. I think that they have some valid points about what they're presenting, especially when you think about the unbanked, especially when you think about currency worldwide, especially when you think about how the market is dictated by, different things. But the Bitcoin market, or the cryptocurrency market, is affected just the same. So I think it's a good move. It's a great way to accumulate wealth. I've seen some of my clients that have done incredibly well with their to the tune of in a short amount of time, almost upwards towards $1 million in their accounts, some of them, in 5 years. So am I saying, is this a get rich quick? No, I don't think it's a get rich quick. I think they spent some time studying what they wanted to invest and how they wanted to invest, and it was a very calculated risk, and they took it. So that's what I would say. If you're worried about crypto and you're still kind of like thinking like, I want to do it, but I'm on the fence, I would say do some research. Shameless plug for my podcast. We have an episode called Crypto for the Common Folk. And we talk about a lot of this stuff on there and how to get in and what to look for and research. And I mean, since Google is here, there's no reason not to know.
No, absolutely. And what I'll do with Emlen too is I'll get a link to that episode number so that we can put that in the show notes so you guys can listen to it on there, because it is a very popular question. Now let's talk about risk with crypto specifically. I know I've heard of like people like losing their password and like losing thousands of dollars suddenly, or getting hacked, let's talk about the risk, Emlen, of crypto.
I think it would be like, I think it's, because you got the all kinds of different traders in different places. I think it's about going to, a reputable site, right? If you're going to go trade crypto, there's tons of places. I personally use I use Coinbase. That's what I use. I like it. It's not going to have all it's not going to have everything that some of the other places have, but I know it's a reputable company, right? I know that it's somewhere where if I lose my password, I'm going to be able to send my email address in and they're going to send me back my password, right? So I think that finding, just like anything else, you want to find a reputable company that you can work with that's going to give you the comfort to be able to do that. Because what you're talking about is someone just, not being able to access their money. And that's probably because the company that they picked wasn't a reputable one that was going to be able to stay open. So other than that, I mean, I think the risk that's in crypto, like, the coin can go to zero, like you know what I mean? So it's still investing. It's not, you know what I mean? So the risk is going to be there just like it would be, in the stock market. I don't know, outside of those two big coins, there's some other bigger coins that I like, but I don't really get into the, like, seriously, for me, I don't get into the like speculative ones that I don't know much about and try to do anything there, because I just don't, I don't feel comfortable doing that. So this is me, and I'm, this is what I do for a living. So I would say, that's when you're talking about like the dangers are being able to lose. I mean, one is making sure that you have a reputable company, and two, don't invest money that you're not willing to lose.
I love it. I love it. Absolutely. And this is a new area, and, I can't possibly imagine going at it alone. It's just, there's so much complexity, and like I said, you're dealing with so many people, you're dealing with so many different types that, definitely having an expert like yourself is really, really helpful for that. One of the things I'd love to ask you, Emlen, and you're obviously a great financial manager, a great financial advisor. You know what you're doing. But as a CPA, I have also met others that are like, okay, let me get out of the room really quick. Okay. All right. I think I might know more. But so as our entrepreneurs, they're not investors, right? They know how to build great buildings. They know how to heal cancer. They know how to be a great plumber, right? Well, they're not investors. They're not investors in the market. And how do they know? What questions should they be asking when selecting an investment advisor? What should they be aware of when they're making that decision?
Absolutely. That's a wonderful question. The first question, because it's a wonderful question, and I think this is something that everyone should ask. But the first question that I always ask is how they're compensated. And people say, well, will you do that right from the beginning? Right from the beginning, because if they're fee only, if they're commission based, if they're fee based, if they're whatever they are, then if they're commission based, that they're going to have to sell you a product so that they get paid. So at the end of this, you're going to have to buy something. If they're a fee based advisor, then that they're going to manage your assets and they're going to get charged a fee. If they're fee only, that they don't work for another company. They're probably a independent RIA and you're only paying them. You're not paying anyone else. So and they don't sell products. There's no products to be sold. So one of those things is, you want to know who you're dealing with. If you're coming in and you're talking to someone and they're on commission and they're like if they work for a large insurance company, like I did for a long time, nothing wrong with those guys or that type of advisor. Just, you need to understand that they are working on commission and that they're going to try to sell you a product. There's nothing wrong with that. They're probably selling you something. They might be selling you something you need. They might be selling you something you need. So, make sure that you understand that. And if they're an insurance person, then, go through and do what you have to do on the insurance. If they're a fee-based person, then, ask those questions. How are you compensated? Are you compensated by an outside company? When I worked for an insurance company, I was compensated to sell insurance and say we were doing financial plans. I would do a financial plan in the hopes that you would buy an insurance product from me. And now we've went completely fee only. So there's a huge fee only network. So you can either search fee only, like the fee only network. The reason why I love the fee only network is because they remove all the products when they're a fee only advisor. They're not going to sell you any annuities. They're not going to sell you any life insurance. They're not going to sell you anything. They're going to give you advice and they'll probably manage your investments for a fee. And that is one of the cleanest things that we made a transition, because we used to be a commission-based firm. Then we went from commission-based to fee-based. And then from fee-based, we went to fee only, because the products were just getting in the way of the education and the solutions for the clients. Because it's not always just, oh, this life insurance policy is going to take care of everything. It's going to be your savings account, and it's going to be your life insurance policy, and it's going to be your retirement plan. And if you need to send the kids to school, you can put everything in this life insurance policy. That's just not true, And so when you remove the ability, or you remove the products, you don't even have that as an option.
I love it. I definitely love it. Any other things that we should be asking potential investment advisors?
I would want to know, like, what the culture is, who's their ideal client, right? Just ask them up front, who's your ideal client? Who are you trying to help? And if they're trying to become all things to all people, then this might not be for you, right? If you're very specific, like I know, I have a niche or a niche. I work with first generation college graduates, right? That used to be do-it-yourselfers making six figures, that can't do it, that don't want to do it themselves anymore. That's my client. You know what I mean? So when you have some people talk about women in tech, I just work with women in tech. If you're a woman in tech, that's who you need to talk to, So ask if they have a specialty. I think that's very important. I think, like, when I like to use doctors as a reference, and I know there's doctors that listen to this. When I had to go, I ruptured my Achilles tendon a couple of years ago, 2019, horrible. But when I was looking to get my surgery, I wasn't looking for doctors that worked on knees. I wasn't looking for a doctor that worked on the shoulder. Didn't want to talk to a doctor that worked on elbows. I wanted to see that specific doctor. So I would say that, asking what their specialty is, asking how they're compensated, and then, seeing if they're a good fit. Like, do you fit with this person? Do they mesh with you? Right? Do I vibe with them? I always say vibes. Like, are you picking up on good vibes from this person? Like, do you feel like this is someone that you're going to let into one of the most intimate things that you have is your money, and I always say, go with your gut. So first things first, how are you compensated? Second, do you have a niche or people that you work with? And three, do you have a good vibe from them? Like, does this feel good? And if you get those three, typically you're right. If you're okay with them working on commission, okay, that's fine. Nothing wrong with that. If you're okay with them, not being a specialist, that's okay, because you can be a general practitioner too. We all have our general practitioner physicians that we see that get us to the specialist. And I think that's kind of where I see some of the fee only people, because when I'm having to do insurance for someone, I don't sell the insurance. I have no desire to sell the insurance, but I can get them in front of someone that sells insurance and make sure that the product that they're going to get is what they need, because they're working with me and they're paying me as a fee only advisor to give them advice on what to do. So I would really say just, those three things, I think, would really lead you to find the right person. And if you're looking for a place where you can go, you can always go, like I said, it's a feeonly.com, or you can go to feeonly.org, or you can go to NAPFA. There's going to be tons of places like that where you can find those types of advisors that I think do a great job.
I love it. Now, is it state specific, or can we use like if I lived in Houston, yeah. I could work with you also. Mm-hmm. Okay, perfect. So really anybody in the US, that's perfect. That's awesome. Now, Emlen, one of the things that we like to ask our guests as we close out, and we've gotten so much juicy information. Thank you for being so generous and helping us through this interesting period, and also the entire world of crypto with that too. If you had one piece of advice that you could leave our viewers and our listeners with, what would that piece of advice be?
Never stop learning. Never stop learning. This is one thing that I've learned. They said, someone told me, you can be a flowing river of information or a stagnant pool. The choice is yours. And so I would say never stop learning, right? You have to be that flowing river of information. You're an entrepreneur. People are entrusting you to take care of something for them. It's your duty to be a forever learner. Like, we just have to be learning, because when you think about people drinking from water, right? And you see a pool of stagnant water, that's not where you want to drink from. So what I would say is continue to learn all the time, so you can be that flowing fresh information for the people that need you.
I love that. So entrepreneurs out there, do not be a stagnant pool. Okay. Be a flowing river. Don't be the same as you were yesterday. Always be changing. And when this was such amazing information. Now, how can our viewers and listeners, what's the best way to contact you, to learn more, to work with you?
If you're looking to work with me, you can always go to our website. That's gennextwealth.com. So that's gennextwealth.com. If you're just trying to see what we're talking about, you can always check me out on Twitter. So I'm on Twitter or Instagram. That's Miles-Mattingly. That's Miles-Mattingly. So those are the two places that I'm on. And then we got, the podcast. You can always see us at my Minority Money podcast. You can find that on all of your podcast outlets.
Thank you. And what I'm going to do is I'm going to put this in the show notes, the contact information for Emlen, so that you guys can contact him, work with them, listen to his podcast, and learn more about investing. Thank you, Emlen, for joining us today and sharing your wealth of knowledge.
Absolutely. Thanks for having me. I had a blast. So yeah, it was fun.
Thank you.